All right, it's time. I am Yuan He, your host here at Non-Zero Investors. Welcome, everyone. Um, you are watching N0S Investor, the home of the non-zero sum investor. This report or this broadcast is provided for information and educational purpose only. It does not constitute to personalized investment advice for any specific person, and it's not recommendation to buy, sell, or hold any security or any particular for any particular investors. I am a registered investment advisor and controlling owner partners here at HY Financial and Nasdaq Tech, which could create a potential conflict interest that you should consider. So today, this is literally our first live YouTube stream. Today, we're going to go do a deep dive on SpaceX based on our expert-led agentic research. We hope to give you a more in-depth information than what's currently dominate the airwave. So allow you to really peel off the hype, really understand the underlying business, and invest in the business, not just the hype. Before we begin, if you're first time, if you haven't subscribed to our channel, please do so. It will allow you to type in comments during the live chat. So please subscribe to our channel first, give a thumbs up. And if you want full access to the report, please refer to the comment below in the description. And again, this is our first video. We're just beginning to build this channel and the community. Certainly appreciate all your support. I'm going to now switch my video feed to my iPad and to go through our deep research. Okay. Now, this stream is about scheduled for 20 to 30 minutes. I will try to hit the major highlights in our research. There will be some new concepts and some proprietary frameworks that we use for valuation, which I will try to explain. These frameworks are result of 20 years of learning. And here I'm condensing them to what I think are the most important. So I'm using these condensed framework leading our agentic research. And using these framework, we have built this proven track record close to 20 years for managing SMAs for my clients. Now, our research is strictly focusing on the intrinsic value, which may not reflect where the market will go at the day of IPO. NOS really stands for non-zero sum. So we aim to identify companies with intrinsic value that have momentums and tailwinds. So that will increase your probability of being on the winning side of the investing. Okay, now digging down to the report. This report was this report was completed during May 22nd, just a few weeks ago. Here on section 1, we will talk about our bluff, stand for bottom line upfront. Our current stances is really neutral and speculative, and we'll cover why. Our overall thesis on this, although it's neutral, there are some bullish theses. Some of the biggest points here is the Starlink. Starlink is one of the only profitable business segment within SpaceX. They have very hard margin, although this is EBITDA margin. So it depends on the amortization and then EBITDA. So we're going to have to put a question mark on this, whether it's really 63%. This here, of course, they do have a near monopoly. It is supported by almost 10.3 million active subscribers across 164 countries. This is from the Q1 of 2026. The second part is the Starship, the space segmentation. We are seeing the launch for the Starship. SpaceX maintain nearly a monopoly in that space as well, although this segment is not profitable. There are some cash flow issues. However, was a recent service agreement was in tropics, leasing almost 300 megawatts of classes. That's generating some monthly cash flow for the company. Okay, and here are some of the major bears thesis. Number one, it's really the capital expenditure for the XAI was all the cloud data center build out. It's logging in at almost $6 billion in losses, in operating losses. The IPO that's coming up in June was 1.75 trillion, up to $2 trillion. It has a huge multiple of 94% of almost 100x in terms of price to sale. This, to me, is pretty big of a red flag. All right, and then another very bearish thesis is really on the dual class of share structure. So this almost gave Elon Musk almost 85% of a combining control of the company. This is why he's able to merge with XAI, and then briefly talking about merging was Tesla. So without a governance body, Elon pretty much can do whatever he want to do, and that lack of a governance oversight is somewhat questionable. Okay, I'm just going to skip over to the BLCV. So BLCV is one of our N0S proprietary framework. The BLCV stands for business model, leadership, competitive advantage, and valuation. We typically look equity company in these four lenses: business model, how was the business model? What does the revenue model look like? How are they generating the free cash flow? Leadership, who's driving the ship? What's the vision? What's the character? It's because really the business, the culture, it's really from the imagination of the leadership. So it plays a very high value under the leadership. Competitive advantage, how big is the moat? As the company continue to grow, great company need to have an endurable moat over long term. And then, of course, valuation. BLC provides a good framework into the intrinsic value of the company. Price and valuation provides into like whether you're buying what's in the margin of safety or not. So I kind of see these two as a little bit different. Okay, in terms of the score, here leadership, some of the red flags. Some of the score that on the lower end of the scale is the leadership. Again, this is not tied to Elon Musk himself. This really ties to the governance body, how the dual voting structure is set up, that the board is giving Elon almost total control. And then the valuation, being 100x of a price to sale multiple, it's quite a high, right? And then valuation wise, the company is not yet profitable. So people are buying into the hype, the promise, the vision of Elon Musk. I'm not saying that's not true, because he is quite remarkable. I have a lot of faith in Elon. I have a lot of faith in his capability in building great companies. But whether the great company justify a very high level multiple, that is what's in the question here. Okay, I'm going to skip over to some of the data that I want to present. Again, if you want to take a look of our final report, feel free to get to the link in the bottom of our description. So just want to cover a couple of things. The three major segmentations. One is the Starlink, very high margin, like I said, very high growth, 50% year to year. Strategic importance is very high. And then the cash flow context, $11 billion in revenue. However, the other two segments, the launch and the Starship and the XAI, they're both operating at an operating loss. So basically, essentially, the entire business is using the cash flow generated from Starlink to fund space and XAI, which both of them requires very high capex. So if you're investing in a business, especially at a $1.7 trillion and $2 trillion valuation, are you comfortable investing in a company that doesn't really provide current cash flow, and then the future cash flow is built on top of the visionary, the promise? Okay, so for me, it's a little bit early. We want to see momentum in turning these other two businesses into profitable, or at least you see a trend to become profitable. There's a lot of questions on whether we can make these two profitable. Okay, so I'm going to talk about some of those issues here. Okay, one of the big valuation come from TAM, total addressable market. A big part of valuation come from this big AI enterprise, which the TAM is $22.7 trillion. How much of this $22.7 trillion can be occupied by XAI? And I think that's probably one of the biggest question that would justify or not justify the current valuation. I will present a couple points. So from the current trend, we see Anthropics, we see Gemini, Grok. It's farther down the list in terms of current trend, current usages. And then also there is the China factor. So the China factor is really about bringing the cost down on what people are paying. So of the $22.7 trillion, whether it's based on tokens or subscriptions, people are placing a very high valuation on these tokens. Over time, as open model comes on board, as China model comes on board, as more efficiency come on board, will the cost per token drop? If it does, then you put this $22.7 trillion pie in question. And then the next part is, of course, how much of this big pie can XAI occupy, right? So I'll put a big question mark here, and this is the driver for the $1.75-2 trillion. If you have a issue on this underlying thesis on this TAM, then you may or may not want to address assign that big evaluation. Okay, and the remaining TAM, it's much smaller in comparison, both with the connectivity for the satellite and then space launch. Okay. The next part I want to cover with just the remaining 5 minutes is this part right here. Okay. So this is taking a look at the cash depletion. So this is, I think, is another big risk on the cash flow. And maybe this will tie into why the SpaceX is going through IPO right now. So they have pretty much raised many rounds through the private sector, and then there are probably no more private sector that want to jump in. So that's why the opportunities open up to the public sector. So this is your retail investors. Typically in these big IPOs, you have your investment banker reach out to their client first, and then the retail investors who don't have any sort of representation in this private equity side will get the last in line, right? Last piece of pie. So their valuation, is on the bottom end of it. Okay, so by itself, you probably be overpaying for the IPO by itself. And then this is another risk here. It's really about the cash flow. How much are they burning in terms of the cash? Okay, they're having a big cash flow issue right now because of the heavy capex. So as you can see here, the cash equivalent is going down. the total debt's increasing, just like the U.S. debt, right? If you don't have income coming in, you have a huge debt blowing, then your expense is going to go. Your interest is going to eat into your free cash flow. Okay, I think this is the driver why they keep raising, try to raise the IPO, try to get additional cash flow. Again, just from normal business sense, if somebody come to me and say, "Hey, please invest with me, give me some money to keep my business going," that business probably doesn't look as attractive as a business that was positive cash flow and they want money for expansion versus they need the money for survival. Okay, having operated a couple small business myself, when people come to you in need of keeping the business afloat, that really is a red flag. Okay. So I think those two are probably the biggest factors for me. One is the overall valuation of the AI total addressable market size, and in which SpaceX drive its valuation from. And then number two is its cash flow issue. Okay, and then if you had to throw in the third issue that I see, it's mostly about the leadership score, which is the having the total control of the voting shares and not having an independent board that can govern the company where it goes. Okay, so I'm at my 20 minutes mark. If you have any questions, feel free to subscribe. You can sign up at NOS.tech so you can keep up to date in our future reporting. And then you also welcome to ask questions there. Okay. Thank you for joining in our first live stream on SpaceX. Hopefully, you're getting some insight into SpaceX, and then we'll talk to you next time. Thank you so much.